Excellent. Hey, everybody, welcome. Excuse me. I had the great fortune of talking to you guys right when the FOMC meeting is about to come out, which is okay. Actually, it's perfect because the way I trade, I don't necessarily follow the FOMC meeting. I think I heard one of the presenters, Elena, earlier say that she likes to trade more of the aftermath of the news, and that's exactly how I am too. So usually I let the FOMC meeting come out, let all the volatility take place, do whatever it does. I let the dust settle. Sometimes it takes a day, sometimes 2 days. And then we can get to see a better picture of where the market is trying to go once the market has digested that information. So quite frankly, even if I wasn't on this call right now, to be honest, I'll probably just be watching the news or doing something else, quite frankly, and then come back later on around 3:30, 4 o'clock tomorrow morning and say, okay, now that the information is out, how do we then use this, the news that came out to kind of guide us through this process? So, even though I'm going to be on the call and I understand that some people might be worried about what's going on and what my position is doing and all that kind of stuff, I'll just tell you right now, all my positions right now, I'm leaving it the way they are. We are more of a longer term trader and investor. So we more swing trade. So every position that we're in right now, we left them in with the intention and the knowledge, full knowledge that yes, we're going to have FOMC. So regardless of how the results comes out, we don't plan on adjusting our positions whatsoever. It's almost kind of like if you think about when a hurricane hits, we know the hurricane is coming. And prior to the hurricane coming, I live in Florida, by the way. And anybody who lives in Florida knows that prior to the hurricane coming, they give you plenty of warning ahead of time. So much so that people are even able to decide if they choose to, they can leave the state if they want to, depending on how severe they think this hurricane is going to be. But the true Floridians who are like, we've weathered so many hurricanes would say, you know what, all I'm going to do is just board up my house and that's it. And so they'll go to Home Depot, Lowe's, and all these other stores, Walmart, and buy sandbags, plywoods, drywalls, all kinds of stuff, hammers, nails, everything. And we just basically board up the house. And then after that, it's like you just sit back and just wait for the hurricane to blow over. Now, very interesting. You still have some who are daredevils that would go out to the beach and look for those waves, which is cool. So that's kind of like what we're going to be seeing today, with the FOMC meeting coming out. There's going to be a lot of volatility. Some people love jumping into the midst of it, and just like these surfers would do. And then there's others who would say, look, I cannot stomach this. I am moving completely out of the state. And you have those people who sold everything they have. And then you have the people like myself who would say, look, I am not going to go out and surf, nor am I moving out of state. I'm just going to board up my house, which is what we've done, and then just sit back and wait until the hurricane is over. And then when the hurricane is over, we come out and then we assess the damage and then we go from there. And we do this every single year in the state of Florida, like literally every single year in the state of Florida. And in a way, that's the approach that I take to the FOMC meetings. I don't concern myself too much about what they're going to say or what they're not going to say, because quite frankly, a lot of our positions are already in place with the intentions of, with the knowledge of the FOMC reaction or not. Does that make sense? And so it doesn't really bother us that way. And hopefully, when I show you some of the things that we talked about today, well, you understand why news like that doesn't really affect the way we approach the market or not. Does that make sense? Okay, so let's go ahead and get started. Our quick disclaimer. Again, we are not licensed financial advisors. Everything I share today is just from my own personal experience. It is not meant to be a recommendation to buy, sell, or hold any security. So please keep that in mind as you go through this presentation. My hope is that, and I don't like using that word hope, my goal is that what I share today will open your eyes to see, hey, there's a way that might suit you in approaching the market. And that's pretty much what I'm trying to accomplish here today. So a little bit about myself. I'm the Chief Technical Strategist over here at Right Side Trading. I've been in the accounting, finance, and investing background for over 17 years. And especially within the last 8 to 9 years, I've been focusing more on quantitative analysis and technical analysis. Now, a lot of people have heard about technical analysis, but not everybody's heard about quantitative analysis. Not that big of a deal, but it's just another way of approaching the market using quantitative analysis. I like that very much, so much so, I like it better than fundamental analysis. So there's a lot of people that use fundamental and technical. We use technical and quantitative analysis, and it helps us so much better that way. But all that being said, I also have a huge background in fundamental analysis as well. I went to college studying accounting, and after college, one of my fortes and the companies that I worked for was to analyze financial statements when they were involved in mergers and acquisitions. My goal was to make sure that any company that was going to be bought or sold was really a good company and what the true value of the company was. So I simply just took all that and applied it to the stock market. And what I did was then I took that knowledge and said, how do we identify good companies, but the ones that are trading at really good, attractive prices, where the risk is low and it has a good potential for capital appreciation. That was my goal. And so once I understood what it's like from a financial statement point of view and a fundamentals point of view, I said, how can I see this from a quantitative and technical analysis point of view? And in essence, that's what we have developed. What I'm going to be showing you guys today is really just the results of all that. So what it would have taken me, say, days and weeks of research to do the analysis from a fundamental point of view, I can now go on the technical side and the quantitative side and figure out the same results in a fraction of that time. Make sense? And so what we primarily focus on is doing research and studies that is focused on price movements and patterns in the market, especially in the major indices. We focus on 5 major indices. We like to focus on stocks, ETFs, IPOs, and so on and so forth. So that's a little bit about ourselves. We call our company Right Side Trading because our goal is to anticipate what's going to happen going forward, not what is happened in the past. Now, we use past information to help us anticipate what to expect going forward. And so predominantly, the reason why we are not day traders or scalpers and why we focus more on swing trading and longer term is because with the way we approach the market, we can see a lot of data that tells us where stock is likely to be in the next 3 months, 6 months, and 9 months. And so because we've been so accurate on that, we decided, let's switch from worried about what's happening from a day-to-day basis to saying, how do we plan our quarter? So right now, we're really, in all our subscribers, one of the biggest things we're gearing them up for is saying, get ready for the fourth quarter. We've already ended the third quarter. Most of the profits that we are making now were all planned back in July. And so we're just closing out trades, managing positions based on what we started doing back in July. And now we're taking those excess cash now to prepare ourselves for the fourth quarter, which we plan on doing very soon between October and December. So we found that if we focus more on that type of time frame, a lot of this volatility that we see along the way is already factored in. And that's something to just keep in mind for anybody who's thinking about, hey, volatility affects you so much. You don't, maybe you had seen a stock that you thought was going to do well, but you didn't trade it well. It didn't end up, and then you come back 2 months later only to see that the exact same thing you were thinking about is exactly what happened. But for some reason, you were the one holding the short end of the stick and the empty bag because you didn't trade it well or manage it properly. All right. So just keep that in mind that, time is, Warren Buffett said this, time is your best trading partner, or he called it an investment partner. I use the word trading partner. Time is your best investing or trading partner. And so the question you should be asking yourself is, are you partnering up with time? And if you're not partnering up with time, then you might want to consider how you can do so. Make sense? So anyway, so that's a little bit about us. Let's start with this quote right here, which said, there's only one side to the stock market, and it's not the bull or the bear side, but the right side. Does anybody know who said this? Just use this type to just see if I can get some feedbacks. Anybody knows who said? If you don't know, just type in an N. Let me see if I can open up the chat box here. Somebody said Wally said it. Nope, it wasn't me. Yogan, hey, are you still in Germany, Yogan? I'm not sure if you're still in Germany, man. Well, welcome again, buddy. Nice to have you on the call, man. All right, so it wasn't me. I did not say this. Very good, though. I like that. I like that. Somebody else said Warren Buffett. No, it wasn't Warren Buffett, okay? So the person who actually said this quote, which I, just because they ended with the word right side, which happens to be our company's name, I'll say, you're going to be forever a fan of mine, all right? And the person who said it was Jesse Livermore. Jesse Livermore, most people know who he is. Legendary trader. He tells you everything that he went through, good, bad, and the ugly. And a lot of people have learned from him, from his mistakes, from his success, a lot of stuff. So to me, this is one of the quotes that I like about what Jesse Livermore said. It really isn't about whether the market is bullish or whether the market is bearish. The question really is, are you on the right side of the market? And that's one of the reasons why I love our company. And the way we focus on the market is not, oh, is the market bullish or is the market bearish? Are we going into a bubble and all that kind of stuff? I don't focus on those things more so than I say, what's the data in front of us? And are we on the right side of that data? That's all that truly matters. Are we on the right side of it? And being on the right side of it doesn't mean that we always have to make a profit. Sometimes being on the right side of it is saying, I know the market's going to drop, so let me sell everything and get out and sit on the sideline. Okay. So just making sure that we are on the right side is all that really matters. Yes, German. Cool. Excellent. Excellent. I mean, Yogan, not German, Yogan. All right. So now, why is this important? Because I think this is important to me when I started really coming to grasp about how the market works. I started realizing like, wow, you know what? What Jesse Livermore is saying is truly, truly important, because at the end of the day, I've come to realize that the stock market truly is not random. Now, usually when I talk about the stock market is not random, one of my quotes that I always end with, now this is a quote of mine, I say the stock market is not random. And I truly, truly believe that, because once I started realizing, wait a second, it's not random. People say, oh, it's manipulated and all that stuff. Even manipulation is not random. Does that make sense? When the market is manipulated, yes, we don't like it, but the fact is it's not random. And so the key here is to understand what pattern shows you that manipulation is about to happen or manipulation is taking place. And I learned that from listening to this gentleman right here, Jim Simons. Anybody who's ever heard of Jim Simons would know what I'm talking about. If you've never heard of Jim Simons, I highly encourage you, go find some information about this guy. Awesome guy, multi-billionaire. He started back in the 1980s. Long story short, he came to realize he's a mathematician. And using math, he realized that the stock market is not random. So he hired statisticians and physicists. And so through physics, math, and statistics, he realized you can actually see patterns in the market. Now, he never really said you could predict the market, which is very interesting. He didn't say you could predict the market, but he said you could see repeatable patterns. And then you can use those repeatable patterns, the historical data of those historical patterns, to anticipate the future, so that if you see those patterns, you just act accordingly. However, if something starts deviating from those patterns, you know that you should adjust accordingly as well. And so I really, really resonated with that, because I realized I don't have to predict the future anymore. Everybody's trying to, oh, where's the market going to be in 2 months from now? Where is it going to end? I'm not trying to predict that. I just go back to what Jesse Livermore said, and what Jim Simon says is, am I on the right side of the market? That's all that matters. And so for that reason, I want to know, is it bullish? Is it bearish? Have we hit a bottom? Have we hit a top? Is it reversing? Is it not? Are we in the beginning of a new trend? Are we at the end of a old trend? That's all that really matters. Am I on the right side of it? But one of the things Jim Simon said was that patterns in price are not random. However, they seem close enough to being random. And that's why when you hear people say, oh, the market is manipulated, that seems like it was random, but it really isn't random. Does that make sense? And so he said, we searched through many historical data. looking for patterns that we would not expect to occur at random. In essence, what he's saying is, if I see something that is happening at random, meaning that there's no historical data behind it, no historical pattern behind it, guess what? Jim Simon and his algorithms for his supercomputer says we would not trade that. And when I understood that, that just blew my mind. The only thing was Jim Simons wasn't telling anybody what were the patterns he was looking for. And so I just went back to work and said, I got to find out what type of patterns can I identify in the market so that when I see them, I know it's time to buy. And when they deviate from those patterns, I know that I need to make some adjustments. And that, in essence, is really what being on the right side is all about. And so everything, our whole life's work when it comes to the stock market was based on this concept that we have developed, tweaked, improved, and perfected over and over and over again. Makes sense? We perfected this so much that it helped us with even some of the things I'm going to show you. But in that process, some of the things that you will find that are repeatable over and over and over, these things occur. And almost anybody who sees this would agree with me, you know, but they also come out to be like news related, which is kind of what we talked about today. Earnings, dividends, stock splits, insiders buying versus billionaire buying. I use that separately because we all know what insiders buying is. An insider buy could be somebody who's a director for a publicly traded company, but a billionaire is kind of like the Warren Buffetts or the Carl Icahns, right? Or the Kathy Woods type of people where what are they buying and selling? These occur over and over and over. FDA approvals, seasonality, upgrades and downgrades, IPOs and SPACs. SPACs is pretty much new, but the way we approach SPACs is very similar to IPOs. F1 meetings, which is what we have right now, market reports, which we get all the time, and then mergers and acquisitions. Ladies and gentlemen, these are news-related events that happens over and over and over and over again. I bet you every single one of these is going to occur within the next 3 months. Every single one of these are going to occur within the next 3 months. And so if we understand this and we understand what Jim Simons is saying and implement what Jesse Livermore is saying, then we can help ourselves by making sure that we are on the right side of any one of these news-related events. Does that make sense? At Right Side Trading, the four that we predominantly focus on are seasonality, IPOs, earnings, and stock split. Now, we could do others too as well. Don't get me wrong. We could do FDA approvals. We can do upgrades and downgrades, which we really love as well. We can do a lot of different stuff, but the ones that we predominantly focus on more often than not, the seasonality, IPOs, earnings, and stock splits. When I see these, and when we find stocks based on these concepts or these news-related events, it's like, this is how we've been successful in the market. Make sense? And so let's begin. I'm going to start off with showing you our right side report. We write this report every single week. And I want to show you something here because back when the pandemic happened, some people believe that nobody could have seen that happen. Other people say that you were just lucky. I want to show you this because back in January of last year, 2020, in our right side report, based on our technical, quantitative, historical data, we started noticing that the pattern of a big drop was about to take place, okay? And so in that report, I wrote, because the market is in unison, we need to be ready for either a slowdown at best, okay, or a reversal at worst. Now, we had no idea how bad it was going to get, but we knew something was there. We went on to say, the writing is already on the wall. So much so that we say it is time to take profits, exit positions. The market is warning us to take heed. Now, this was written on January 24th, 2020. Now, if you notice the strong urge, we were urging people very strongly. It wasn't like we were sitting on the fence. Oh, maybe it could, or maybe it could go up, or da-da-da-da-da. These were very strong words that said, look, be ready for a downtrend a slowdown, I'm sorry, or a reversal at worst. The writing, when you come out there before things happen and say the writing is already on the wall. And this is not us being the people that say, oh, the market's gonna crash, market's gonna crash, market's gonna crash. And we've been saying this for 5 years, 6 years, 8 years, 10 years. This was just literally, most people that knows me know that we are bullish predominantly in the market. But when this finally occurred, we said, wait a second, something is wrong. The writing is on the wall. It is time to take profits, exit your positions. These are like very, very to the point. Let's make decisions because the writing's on the wall. And I said, the market is wanting us to take it. And the reason why I said that is because nobody should come back later and said, oh, nobody could have seen the pandemic. That's like, no, for those who know what to look for, you could have seen that. Okay. Then 2 months later, on March 27th, we started writing again. I said, wait a second. The question is, have we found the bottom? Or is this just a relief rally? Here's the answer. The market is communicating that it is time to do what? Cover all short positions. Okay. Cover all short positions, exit all your short positions, and get ready for a rally. Ladies and gentlemen, this was on March 22nd. We saw this and we saw the data, we saw all the information. So wait a second, the patterns for bottom we are literally looking at the pattern from bottom. Funny enough, because it happened so quickly, even we were a little skeptical. So wait a second, this can't be. I mean, we thinking, the whole world is shut down. Market should be dropping for the next donkey years. But then here we are 2 months later, said, wait a second, the bottom? We've seen the bottom already? And so we actually watched this for like the next 2 weeks just to be sure. Because like, I don't know. So I would say that was one of the times where we even hesitated just because it's like, let's see what's happening. But I said, look, based on the data, it's showing us that the bottom is there. So this is where I say it's not random. Okay. And I always tell people, look, anybody can be lucky once or twice, but when you're consistently over and over and over seeing patterns and being able to be on point about this, the question is, what is it that you see? Okay. So when the market started rallying, a lot of people were in disbelief, including ourselves in the beginning. But 2 weeks after that, we said, look, we're going for it. And I literally watched how the market kept on rising and rising. And there were people out there still skeptical, until the market reached all-time highs. And then the skepticism turned into frustration and anger because it's like, oh, it's not fair that Wall Street is doing well while the economy was not recovering yet. And I said, that's where people went wrong, was they were not looking at the right data. Does that make sense? And so that's what we've done. Now, that was last year. And I always tell people, look, it's good that you've done one thing once, great. But can you continually do those things going forward? And so for that reason, I'm going to share with you guys this right here. This is the right side report, the same right side report that we write every single week, where we were talking about what is about to happen right now. Okay. So here is the right side report on September 3rd, 2021. Okay. And you can see right here, there's only one side to this market, and it's not the bull side or the bear side, but the right side, just a little more. I'm just going to highlight the areas that I, section off here to point out what we were seeing. It says, look, I've learned and earnestly try to convey that it is more important to be on the right side than worried about whether or not the market is bullish or bearish. Okay. Then down here, this is where we started analyzing the market. We said, since the buy signal that we got on August 23rd, the market has continued to make new all-time highs, the 55th for 2020. For now, it is best not to chase the SPY, which is the market. Instead, investors would better suited to manage positions until we see another buy signal, perhaps in September. Now, why were we thinking about September? Because we knew certain data that led us to say, be expecting something in September. We're going to scroll down here, just show you a couple more highlighted sections. Here's the Dow. Interestingly, we have seen some breakouts in the Dow Industrial over the last 2 weeks, such as in Apple, Walgreens, Verizon. However, the Dow has only managed to drift sideways. This typically means there are problems underneath the hood. And if this is true, guess what? This can lead to a drop. The one that we're expecting in September. So again, we were already expecting the market to drop in September, right? And I'll read this one really fast. But on Friday, it failed to confirm the rally, keeping it in a range bound. This is talking about the transportation. In addition, the right model is warning investors to protect themselves, sit on the sidelines until a clearer path is set. So we're telling people stay away from the market. The next week, we come over here the next week and we said this. What we can see in the chart below is that because based on that yellow line, we should be expecting the market to drop until late September. Where are we right now? We are in late September or early October, and then expect the market to rally for the rest of the year. We go down here, look, things are looking cloudy for the market in general. It is telling us that it is time to short the market. This was on September 10, ladies and gentlemen. It is time to short the market. Okay, this is all in anticipation of the drop that we've been discussing over and over and over. On the QQQs, in that same report, I said the September drop that we expected is here. Now, notice this is going back to, and again, even though this was the weekend of September 10, it said it is here. The drop is here. Get ready. Does that make sense? And then we go on. I'm just going to read this. It is letting us know that we should seriously contemplate exiting any long positions. Anybody who took heed to all this stuff that we were saying back then are probably sitting back and say, look, it doesn't matter what the FOMC says today, because we already expected the market to do what? Drop. Okay. And I'll just leave it at that. And then last week, here's what we said. Patterns in price are not random. However, they are close to random. And so this is the part that I want to say, because last week when the market finally dropped big and everybody's saying, oh, it's because of what's happening in China, we said to ourselves, that's the storyline that they tag in for the reason why it dropped. Keep in mind, we've been talking about this drop for about 2 weeks now. And so the question becomes, if this is true, that it's because of this China Evergrande situation, right? The question becomes, which one came first, the chicken or the egg? Because we saw this and we were literally anticipating all this ahead of time, to the point that we say it has already begun. A week and a day later, market drops. They would say, oh, this is the reason why. I said, was it really that? Or was it the fact that we have seen the warning signs ahead of time? Okay. At the end of the day, are we dealing with a non-random pattern that looks close enough to random? Okay. And that's kind of, and we say it's not random. And so we go over here, people are saying buying the dip, buying the dip. It's like, it's not time to buy the dip. So again, we see all this, not because we're guessing, hoping, and wishing, but we can see the real data that tells us what's going on in the market. Okay, now let me show you this. This is the platform that we created. Everything I've learned, I've put into this platform. One of the reasons why I did that was because I realized we as humans are emotional, okay? There were many times where I would do my analysis the manual way, and then I would still try to let my biases come into place. And I said, you know what? The one thing a computer algorithm does not factor in when it analyzes the market is it doesn't factor in emotions. And so that's the reason why we went out here and we decided to create this to say, look, if the platform that is not emotional and can just take raw data, comes out and says, this is what you should be doing, then we need to be doing that. And that's really what we did. And so a quick overview of what this platform does for us is that whenever we see this green background, we know the market is bullish. Whenever it turns red, we know the market is bearish. Does that make sense? And so we can see right here that the market has been bearish since over here. So this drop that happened last week or this Monday, to us, it was like it was expected. We had actually been expecting all this ahead of time. Makes sense? You can see right here when the right model, this section up here, I want you guys to pay attention. So we said, look, it's not just enough to tell us we're in a bullish and a bearish trend. What should we be doing day by day, candle by candle? What is the one action? That's the one thing we wanted to know. We didn't want to know, should we hedge, should we do this? Like, what's the one action we should take? So if this background is red, we know that we're in a bearish setting, right? The next thing we say is, okay, market started flattening out up here. When it was green, it says wait and hold, wait and hold, wait. At this point, I want you guys to see on September 8th, the market say, look, you need to get yourself insured or get out the market. Because why? The data was showing markets was ready to do what? Go down. So we already anticipated this ahead of time, but the question is, when do we start taking action? And so by the 8th of September, now is letting us know, look, this information that you already were privy to, now would be a good time to take action. Does that make sense? And what this does is it allows us to not worry about what's going on, what's not going on, when should we take action, when should we not take action, okay? Seems that the news traders always are late to the game. And that's, Yogan is just saying this. It seems that the news traders are always late to the game. And that's one of the things that we also experienced. So I'm not even saying like what they're going through is truly legitimate. We went through the same thing too. But when I realized, wait a second, none of this is by random. What is it that they know that I don't know? What information are they looking at that I'm not looking at? A great example would be, again, the pandemic. When the market started rallying, everybody was most people, I should say everybody, there was a lot of people looking at the economic data. They were looking at unemployment rate. They were looking at jobless claims report. They were looking at how many restaurants were being filled. And I'm saying, look, those are all information, but they were the wrong information to be looking at when it concerned the market. And that's why they could not believe that the market kept on going higher and higher. That's all that's going to come back down. But they were all focusing on the wrong information. And that's where I said, wow, it's important that we understand and we're looking at the right information. And so right here, we knew the market was going to go down. The question was, when would it start? And at this point on September 8th, it was very clear, get insured, meaning that if you were already bullish, we know that because this is the green was the background was green. If you're bullish, get insured, meaning that if you don't want to sell, if people ask, what do you mean by getting short? Well, if you don't want to sell your stock, because again, we hold stocks for a longer period of time, it's not always just let's put a stop in there, but maybe you can buy some put protections so that way you can still hold on to things. And that's why we say getting short. So getting short just typically means, look, if you want to buy some put protections because you don't want to sell these stocks, you still want to hold on to them because of what we teach about what's a good company that might experience a short-term pullback, but in the long term still do well. Well, if you want to protect yourself, then just get insured. We do that when we buy a house, when we buy a car, jewelries. Man, people even insure their hands, their butt, their feet. They insure all kinds of stuff. Why not the money you have in the market? And so that's why we put that in there. Look, if you want to get insured, now would be a great time to go get insured, or just simply get out. And so you can insure yourself by using a stop loss, which we call the free insurance, or you can buy put protections, which we call the paid insurance. Does that make sense? But by then, the next day, all of a sudden, it's a get insured to get out and then sell short. This is the reason why in that report, it said the market is telling us to short now. Anybody who followed that is looking today and said, look, we are still on the right side. That's all that matters. And so we talked about the VIX. How do we use the VIX to help us with this? Well, let me show you this. This is the VIX. Now we use the VXX to help us with the VIX. Couple of things. We know that when the VIX starts turning green, we know there's a spike getting ready to occur. But the other thing we know is like it usually doesn't last long. So Jim mentioned earlier today, and he'll probably come back and mention this again, which again, I really appreciate what Jim is sharing is, look, there's some very simple things. As VIX crosses above 20, expect a spike. For us, it's like if the VIX starts telling us that we're turning green, like we see here, or we start seeing information say long stop exit shorts, because the VIX is continually and predominantly goes in a downtrend. And so now it's saying exit your short positions. We know a spike is about to occur. Okay. And then the question becomes, how do we know when it's over? How do we know when it's over? Once we start seeing things say, look, get insured or sell short, or the whole background turns red, we know, wait a second, it's over for the VIX. The VIX is struggling to spike any longer. And if the VIX is struggling to spike going forward, we now know that the market is ready to rally. It's as simple as that. It's very visual. I teach my 7-year-old daughter and my 9-year-old son the same thing. They know. And so when we come to the VIX, we just look, when this VIX started happening, once we saw this, it says long stop exit short, boom, we already knew, oh my goodness, market's going to gap up or the volatility is coming in. Okay, fine. We get a buy cover. Now, we are not expecting to stay in the VIX long term because the predominant trend for the VIX is downtrend. So the spikes that happen, we expect it to last for a few days. If the market is really, really bad, like we head into a bear market, which we actually, talk about, and I can show you how to use the platform to see whether we're in a bear market or not. No guessing. We don't guess. I tell our people, we don't guess, hope, wish, or pray. Right? I mean, we pray to God, but not when it comes to like trading, like, oh, that's what's going to help us. Does that make sense? The idea is, what is the information? We pray that we get knowledge of the right information to focus on, not just sitting back and say, okay, let's hope that this thing is going to turn positive for us. No, that's not how the market works. It's understanding what's going on. And so now we have this buy cover. We have this right here, buy cover. People are like, oh, is the market going to keep on dropping? Hey, possible. But there are things that we know is going to happen. Part of that is seasonality that we know. Part of that is the historical data that we know is like, it doesn't usually get past a certain level before it starts turning around. Right now, if we knew nothing else, what I would teach my kids is, look, when you see this turn back into the red, it's time to start buying in the market. Because once this turns red again, meaning the background right now is green, if it turns red, it's telling us that it's ready to go down. And so one of the things we like to see is not only have it red, but then give us a sell short. So it's one thing for it to turn red, but then when it says sell short, we know market is getting ready to go down. And that's how we use the VIX. So I'm looking at the S&P 500, I'm looking at the NASDAQ, I'm looking at the Russell, I'm looking at all this stuff. And I'm saying, wow, the market is getting ready to bottom, or the market seems like it's getting ready to reverse. But then I also go to the VIX and say, what is it telling us? Because I want to see the VIX go in the opposite direction. There were some times where the VIX was literally going in the same direction as the market. It's hard for some people to believe that, but it happened. When those days happen, we said, look, let's sit back. Market is not in unison. Okay, this is kind of like the repeatable pattern. This is not supposed to be happening, right? So when we see the market getting ready to rally and the VIX getting ready to drop, we say to ourselves, wow, we know that the market is ready to do something. Now, on the other hand, if the VIX is just all red during that period of time and the market is showing us buying opportunities along the way, great. We don't worry about those kind of things. I think Jim mentioned that if it's below 18, you know VIX is low, no problem. For us, we just look to see. It doesn't matter, because when this thing spikes all the way up here, our whole goal is like, when does it tell us that it's time? We just look for the red. We look for one of those right models to say sell short, exit your long positions, and stuff like that to tell us, yep, things are getting ready to go down. And so this really helps us just stay on the right side. If anybody was to ask me right now, hey, where is the market going? Well, it's very clear. I don't have to guess, hope, and wish. It's very clear. The VIX is spiking. Now, this updates every single day. So at the end of the day, we'll see where the VIX is. But I'm saying, if the VIX turns red and the right model tells us sell short, I know it's time to start buying. And this is how we were able to do this back in March of 2020. And we've been doing this consistently every single month, over and over and over again. I mentioned seasonality. One of the new features we added to this was, and this helps us a lot, when you understand what is about to take place. This line right here is the last 5 years. We also have 10 years worth of seasonal data we put on there too as well, if we want to. So when I click on the 10 years right here, you'll see the yellowish, orangish line, right? But then we also see the blue. I like to focus on the last 5 years personally. And we can see that this is going down, going down, going down. We can see that there's a spike that should be occurring, and then the market rallies down. So this is kind of what we were talking about. Now, the funny thing is, this thing says the spike is supposed to occur on the 27th. And anybody who understands seasonality or has traded seasonality, one of the challenges that you might have faced, if you haven't faced it, that you will face, is the fact that it would tell you, oh, this stock is getting ready to do something on this day, like in, for instance, 27th. But you come on the 27th and you find out that, wait a second, it's not working. It's not really spiking like it said it would. And or you might come back and come there and you find out, wait, the spike already happened a week or two ago. Okay. Or you come and it's like you're waiting for the spike. It doesn't happen, doesn't happen, doesn't happen. You finally sell. And as soon as you sell, you see the spike go up. The chances are, the problem is everything is not set in stone just because it's at the 27, it's going to happen on the 27. The idea is to find what are the patterns that are beginning to occur around that time frame. This is just to give you a ballpark, but it knows that something is going to happen. And so this is where I tell people, the smaller your focus as far as time frame is concerned with seasonality, the harder it will be for you. The broader your time frame is, or the higher your time frame is, the easier seasonality becomes for you. I kid you not. It's part of the reasons why we stopped day trading, because we saw that we were not seeing the big picture. We were so focused on the back when we used to scalp and day trade that we didn't really see the big picture. Okay. And that's why you'll find people say, oh, I bought into this stock, I made some good money, sold it, only to see that it's just kept on going higher and higher and higher and higher and higher. And it's like, oh my gosh, I sold too soon. And so what ended up being even a successful trade feels like a bad trade because you left too much money on the table. Chances are you did not see the big picture. And so in this case, we know that we were supposed to get a spike. It's even possible that we'll get even more of a spike depending on how the market behaves. But the one thing we expect is what? That sometime in October, it should start dying down and we'll see the market start heading lower. And so if we can start preparing for that and knowing that this is going to happen, this kind of puts you in a different mindset. The only issue now is, when is it going to happen? When is it going to happen? And that's where this becomes important. When we go back to our price chart, the right model and this green and red background helps us, because we know if it's supposed to start going down, we need to see a red background and a sell short signal. So once that happens, like let's say we see something like this, a red background with a sell short, and we already know within a week or two before that spike, chances are that's what's happening right now. And this is how we've been able to improve and perfect our seasonality trading. It's not just, oh, buy blindly, okay? Or like sometimes people will buy and they expect them to go up for, say, 3 weeks, and 3 days into it, it starts going against them. But then they say, well, let's hold on to it because it's supposed to be 3 weeks, and they wait the whole 3 weeks and find out that at the end of the 3 weeks, they've lost so much more money because they didn't know whether they should get out or not. You never have to worry about that again. We never worry about that again, simply because we can go here. And once the platform says, you know what, it's supposed to go up, but now it's going down, you exit the trade. It's as simple as that. Does that make sense? Let me use some examples here. We talked about earnings. Here is FedEx. FedEx came out with earnings. It gapped down pretty big. Now, it could have gapped either way, quite frankly. You know, we've seen it where the stock was already going down, it gapped up. We've seen it where the stock was going up, it gapped down, right? It could have gone anyway. But here's one of the things that, again, we try to tell our subscribers to say, look, when you know that a stock is so bearish, like we see here, this is, my kids will come over here and say, FedEx, oh no, we're not trading FedEx. I don't care what the earnings says at this point in time. The thing is, this is too risky at this point. And so now to see FedEx drop another 8% today, I'm saying to myself, that's nothing unusual. Does that make sense? I'm not surprised by the fact that FedEx dropped. Why? Because FedEx was already struggling. Look at this, ladies and gentlemen. When they first tried to seem like it was going to turn around, this was back on August 16th. It turned green, but notice what the right model says. Even with the green movement to the upside, it been rallying for 2, 3, 4 days. The platform said, getting short or get out. Why would it tell us to get in short and get out? Because even though the rally was happening, there were things underneath the surface that wasn't showing the predictable pattern in the past. The patterns in the past are showing, no, this is actually looking like it's ready to go down rather than up. Anybody who got caught buying over here, this is where, you know, so people say, oh, the market makers are watching what we're doing. No, it's just that we didn't pay attention to what real information was telling us. This was probably just profit taken right before it collapsed again. Now, most people want to know, but while it's happening, before we know what's transpired on the right-hand side, even on this day itself, it's like, wait a second, market has been rallying, but the platform is saying, No, get in short or get out. That is something that we pay very close attention to. The very next day, even if it didn't do anything, it gave you another red signal or red candle. Get in short or get out. It's almost as if the market is begging you, please get in short or get out, right? And then the next day, it turned not only red, but gave you a sell short signal. So anybody who was looking at this and thinking, oh, it's going to go higher, it's going to go higher, at this stage should say something has gone wrong. There's no guessing, hoping, or wishing. Something has gone wrong. This thing kept on going down and down. And notice what it said. It never told us to buy again. And it was just shorting and going down. Hold on. Don't do anything. This wait and hold simply means don't buy anything. Don't sell anything. Don't short it. Just leave it and let this thing work in your favor. Okay. And it just kept on going down and going down. And then here we are the day before earnings. I was like, this stock has been beat up. Though nothing has changed in this thing. So much so that even if it gapped up the next day, I would still say, let's let the dust settle. That's what Elena was talking about earlier today. Let us let the dust settle. Because is it just everybody getting excited because of one day? The one thing that we feel so confident about is like, once that occurs, if it gapped up, we come back here. Did it turn green? Did we get a buy signal? Otherwise, we say, look, let's let the dust settle. And that's why you might see a stock gap up one day and then go flat for the next few days, maybe even weeks, or it gaps up and then just gives it all back. We don't have to guess about that anymore because we can see whether the right platform tells us to do something or not. I'm going to start wrapping this up by saying this. I'm going to bring this over here. This is an example of how we prepare ahead of time. Here is a chart of EMD. EMD is one of the stocks that we love to trade in October, November, okay? EMD. Now I'm going to show you some things here. First is, again, we have the green, the red and blue line. Not the red, I'm sorry, the yellow and the blue line. I personally, I want to see the last 5 years. From what I can see here on AMD is that if I just project to the front, sometime around here is a very good time for AMD to do what? Rally. And then we have another period of time right here where it does a pretty decent rally. But if I was to look at AMD, this is what we do with our subscribers, say, wow, when would be the best time to make sure we do not miss out on AMD? And anybody who can see this will say, wow, November, end of October, beginning of November. Well, guess what? Now we know, here's a stop, but here's the thing. We don't know what date in November. And that's the difference because we now have this platform to help us. Like once that time comes around, all we simply have to do is go back to the price chart and see what the model is telling us. And when that model tells us it's time to start buying, we know it's time to do something. The other thing we did was we said, okay, we can see this period of time, but the newest feature that we added to this is said, okay, if we know that that's a good time to buy, and we know that this is a good time just based on historical data, right? We have this button right here, this tab called seasonality scan. And one of the things we did with seasonality scan is like we had the algorithm go back and program and said, find which time frame was the most consistent. Because at the end of the day, yes, it's been doing this over and over and over. I want to know which one has been consistent over and over and over again. Key point is this is not telling us which one is going to be the most profitable, but what is going to be most consistent. So anybody who's interested in finding stocks that are going to be consistent, that's where this comes in. When I click on this, you will see it come up with two tabs. One is green, one is red. And what we programmed this to do is tell us when is the most consistent rally taking place for this stock. And we can do this for any single stock that we have on this platform. And then we also say, when is the most consistent drop? Not the largest drop, but the most consistent drop. Does that make sense? That matters to me more than anything else, because even if I know a stock is only going to move 2%, but it's very consistent, that's good information to know. If I realize I don't want 2%, I want something that can do 10%, then I know that's not the stock for me, because what this is telling me now is it only moves consistently around 2%. But I can look right here and I already know that this is a good time for it to rally based on the historical blue line. But then now the scanner has gone in, searched the historical data and said, this is the most consistent rally that you will see in AMD. Huge information to know. So that now when the market is getting ready to rally in November, guess what stock we want to own in our portfolio? And I can actually even look over here and say, wait a second, in the last 10 years, it's gone up 10 out of 10. It has an average of 17.16%. Now that's just average. So that means that there's months where years when it goes higher, there's years when it goes lower. But if you've been doing this consistently over the last 10 years, you would have averaged 17% per year in this period of time. And it lasts for about 33 days. So these are all information that I look at and say, wow, this can really help me make sure that we are on the right side of this particular stock. We have an idea of how much money we can make even before we buy the stock. There's just so much more information. And this is why I said it doesn't have to be gambling. It doesn't have to be guessing. We don't have to hope. There's data out there, ladies and gentlemen. Hopefully I've shown you, even from the report, how we said it over and over, we expect things to happen. When October starts coming, the end of October, and I start saying, we expect AMD to rally. It's not because we're just throwing something out of the hat. We're picking something out of the hat. It's because we know that something is about to happen. This thing has historical data. I didn't make this up. Anybody could go back, research it, and find out this truly has happened. So the only thing now is, how do we use this information and keep us on the right side of AMD? Now, there's a whole lot more that I can go into. Unfortunately, I don't have enough time. Okay, so for that reason, I'm going to show you my offer because I want you guys to look, there's a whole lot more. Huge information that I can share with you what this platform can do and what it's been doing for us. And so it's going to take some time to kind of go over all this stuff. So for that reason, I'm inviting people to come join us for one, a live webinar, and then two, Monday night webinars where you can come and learn how to use this over and over and over again, okay? So let me go back here to my presentation and just say this. The platform itself, if you go to my website right now, rightside-trading.com, it will cost you $299 per month to use it. I think it is a steal for $299. But if you go to this link down here, /deals, you get it at a discounted price, okay? And the discounted price is $97. You can try it out for 30 days. I encourage people to do so, okay? You'll get the platform. You get to come to this live workshop, which we have on Tuesday, this coming Tuesday at 7 p.m. Eastern time. If you cannot attend live, no worries, it's going to be recorded. The other thing is you get access to the right side report because, ladies and gentlemen, we are approaching a seasonal time when the market is going to bottom. How would you like to know when the bottom actually occurs rather than guessing, hoping, and wishing? It's like, actually know this is the bottom. We've done it multiple times. We pick bottoms every single month over and over and over again. We are literally looking to do the same thing again going forward. But it's not just the bottom for the month. Where's the bottom for the quarter? Okay, so being able to understand this and know these information is what we're looking forward to doing. And so you'll get that with the right side report for the next 30 days if you pay the $97, okay? And you get to come to those weekly webinars that I talked about every single Monday. Every single one of these are recorded. So even if you cannot attend live, you can still get the recording. And then I'm going to throw a bonus for those who choose to sign up for 3 months ahead. We'll give you a discount for signing 3 months up front if you choose to do that. So when you go to this link, you'll see two offers. One is if you just want to try it once a month, month by month, or if you decide to go, and sign up for 3 months, you get a steeper discount if you go for 3 months at a time. And we give you this bonus as well if you sign up for the 3 months all up front. What this is our video that we created on the VIX, how to tell when the VIX is over, okay? Part of what this platform needs to see in order for it to say, yes, the VIX is over, it's time to start buying. You'll get to see that in this recording. How to tell when the volatility is over, which is the VIX, and the market is ready to go higher. There are so many people who have seen this like, wow, now I can see that we've hit bottom. Now I can see the market is ready to reverse. There's no guessing, hoping, or wishing. Okay, so if you go to that link, you'll see two choices. You can subscribe month by month or take advantage of the discount and even steeper discount for 3 months in advance. If you do that, we'll also throw in this bonus for you as well. When I used to sell this single-handedly, it was about $500 we sold this for, because the information, quite frankly, is just that valuable and even better than that, okay? So please keep that in mind. If you have any questions, just let us know. But go here, this platform, can the platform be applied to spot Forex? We do have some Forex, but I will be honest with you that I don't monitor the Forex as much, so I'm not sure which Forex pair you're looking for. Does that make sense? But it has tons of Forex pairs on there, and I'm pretty sure you can find, the major ones are there for sure, but just keep that in mind, all right? We also have Canadian stocks on there as well, and we are this close, probably within the next couple of weeks, to have cryptocurrencies on there, okay? And so that's one of the things we decided to add to it, because all my students who trade the cryptocurrencies were saying, look, I've literally applied your concept to cryptocurrency, and it's like mind-boggling how we can see when to get into cryptos, when not to get into cryptos. And they keep on like, oh my goodness, Wally, see how much money I made on this crypto. You need to get into crypto is what they keep on telling me. You've created something that you don't even realize how huge it is. And so I encourage you guys to come check it out, try it out for 3 months and see how this can help you. David, Jim, Anka, I love you guys. Thank you so much for having me on the call. Every time I join you guys, it's always fun, always great. Let's see where the market takes us going forward. I'm going to go ahead and turn it back over to David, and thank you.